I'm Nash Vidula. I'm the CEO and founder of Senior Insurance. Senior Insurance Company is #1 insurance company in New England area. We specialize in senior insurance market. When I say senior insurance market, I actually focus a lot on Medicare Advantage, Medicare prescription drugs, Medicare supplement. If you paid for Medicare taxes for 10 years, each year you have 4 quarters. So if you paid for Medicare taxes for 10 years, you will not be paying Medicare Part A premium. This is already you have paid through the process. So this is an important element to it. So Part A.
When you say 40 quarters, does that mean any part of 40 quarters, or does that mean full quarters, or how much?
The last day you retire. The last day you retire. From there, they go back 40 quarters. They go back 40 quarters and say, did you pay all these taxes? So it's not from the beginning. It's the day you retire. They go backwards. It's not just linear 40 quarters. It's over a span of your whole working career. Part-time, full-time is no problem because you have worked at least 20 hours, I guess. 20 hours, fine. But in your paycheck, you should see FICA. That's the taxes that we're paying. So any paycheck, you see FICA taxes, Medicare taxes that we are paying to the system. And you're paying your Part A premium. How many years have you paid? How many quarters you have paid? That we will see. And easy to see. If you go to Social Security website, sign up, print your report for 2021. I have my report. I'll show you how to print it. It shows you what you qualify for Part A. It tells you exactly. The only ask I have is, it asks you to create a username and a password. Please save it, because that Social Security report is important for our discussions on Part B, Part D, which direction to go. Yes, sir?
I'm in my enrollment period, but I'm still employed, and I still have comprehensive health insurance. Can I still sign up for Part A only and not have a premium?
Part B, awesome question, awesome. What I just want to get from your perspective is making sure you have finished the 40 quarters rule. Yes, you can get only Part A, sign up when you turn 65. You don't have to do Part B because you have a comprehensive coverage, but I do have to ask you a question, which is section called as creditable coverage. Go to that portion there, creditable coverage. The question there is, does your company have 21 plus more people? 21 is the number. It's a big company. So why 21? You can ask me that question. Why 21? 21 is a threshold for a smaller company to a bigger company. Threshold from a government standpoint. If a company has more than 21 people, your company will be the primary insurance provider. And secondary is Medicare. If it's a small company, less than 21, then Medicare becomes the primary. One more important thing. We have to see your coverage. Why? I'll tell you. Medicare Part B, if you are postponing at the time of enrollment, I want to make sure you have the credible coverage. And that credible coverage shouldn't be COBRA, no ACA allowed, no veterans allowed. That's not creditable. Group insurance, 21 plus full-time employees from you or your spouse's employer. I have to make sure. And then your HR. Remember, every year when you enroll into your benefits, it asks you some question like, are you going to convert into Medicare or no? It asks you that question. So you have to answer it correctly. One last thing there is Part A. This is a small rule I put here, HSA/group coverage rule. If you are paying health savings account, you cannot sign up for Medicare Part A. So you have to stop paying for health savings account 6 months before that. 6 months is the deadline.
Not FSA, just HSA?
HSA alone. That is an important rule you have to remember. If you are on HSA, you have to stop paying HSA 6 months before, and then you are eligible for Part A. So that shift has to happen. So 99% of my clients, what I say is, Part A, we have to sign up. As soon as you're ready, 65, sign up for Part A. Sign up, because that's when the government wants us. Part B, if you're not working, we sign up for that too. If you're working, we just have to follow the process. Yes, sir.
I'm going to turn 65 in December.
In December.
In December.
Perfect.
Do I need to sign up for A 6 months before or within 6 months after?
So December, let's say your date of birth, or December 1st, or December 2nd.
30th, it's the last day.
Last day,
Okay.
no problem. So 7 months, 7 months. So December is the month, that's month 1. 3 months before December, so September, October, November. 3 months later, so Jan, Feb, March. So from September, including December, March, that's your window. So by March 2023, you don't sign up, problems. We have huge problems here, and not good. Not good in a sense, I haven't done my job. That's how bad I feel. So tell me your date of birth, month, birth month.
It's not for me, it's my husband.
September. So September month, so take 3 months later, October, November, December. So by December 31st, take December 31st is your last month. Do 6 months prior. So that is July 31st.
Well, I'm gonna go in there tomorrow.
Yeah, July 31st you have to stop FSA.
Okay.
Are you guys clear how I came to that number? July 31st. So based on that scenario, December 31st is the last day for their Part A enrollment. So they're backtracking 6 months and saying the last HSA I'm going to pay is July 1st paycheck, second paycheck onwards you shouldn't pay. So why HSA is such an issue, I'll tell you. You're paying into HSA pre-tax. Are you guys come to pre-tax? It's coming from, that's where they want to stop it. So pre-tax, you're pulling some amount and putting there. They don't want you to pull it because Part A is taking care of that step for you. They don't want to double dip into it. That's the reason that they're stopping us not to do that. Now, folks, there is a Part B discussion we didn't even cover. There's a 20% risk exposure. Let's say your bills came around $100,000. After you signed up for Part A and Part B only covers 80% of that. 80% of 100,000. 80,000 they paid you a check. $20,000 is your responsibility. So that's where it's important to understand this concept of Medicare supplements, because this is also called as Medigap. Have you heard about Medigap policies? Medicare supplement is called a Medigap. That 20% is covered by this. So pretty much risk, I turn it into green. This Medicare supplement will protect you from that risk exposure. So if you think about this, and America is a great country. I'll tell you this for a reason. You have choices to pick and choose your health care after turning 65. Pick and choose is the word. You don't need everything. You can pick and choose what you want. So you selected Part A. You were smart about Part B. Now you're thinking, okay, who is going to cover that risk, 20% risk? I'm going to select Medicare supplement policy. This is covering everything. Wait a second. What about prescriptions? Because supplements don't cover prescriptions. Yes, I need prescriptions. So Part D also you purchased. Then Part A, B, D, and supplement is your full coverage. Full turning 65, basic Medicare coverage you have covered. So think about it. A, B, D, and supplements. These 4 things are important. So then you ask me, Nash, what's the benefit of this? The benefits are, if you select Medicare supplements, you don't have to worry about specialists. You don't have to worry about networks. I had an aunt who had to go through Mayo because she had a rare cancer. And I'll tell you this. Her Medicare supplement helped her because coverage is countrywide. They don't have to wait for specialists. They can go any specialist that they want to see. That's why she chose Medicare supplement. Now, I have an aunt in New Jersey. She is not that well off, and she actually travels very less, no kids. She is local. New Jersey, New York, that's her area. What she told me is, Nash, you know what? I have a great plan, Medicare Advantage. I'm local. If I am in this network, I save a lot of money. Network is the word, network of hospitals. They select, so she cannot go to a specialist anywhere in the world. She can only be local to her area, but she saves some money. Awesome. Okay, folks, so we can run a little faster because you have the firm foundation that I'm sure you'll ask. You can teach me now this session. So that's why I didn't want to, now you see, Nash, we got it, Nash. Enrolling in Medicare, parts of Medicare, you guys know that. Medicare risks, penalties, you know that. Medicare options, that's why I feel now so happy. Like, I have done my part at least with this. Now, original Medicare, most of you asked, how am I going to be eligible and stuff? So you got that. If you have a declared disability, like the Medicare confirms that you are before 65, you can be eligible, before the age of 65. Or if you're diagnosed with end-stage renal disease, like kidney disorder, before 65, you can be eligible. These are special cases to get eligibility. Enrolling in Medicare. If you are on Social Security, you'll be automatically enrolled. That's why I was asking folks, please get into this. Okay, so important thing, 7 months. Your initial enrollment window is 7 months. The birth month, 3 months before or prior, 3 months after. That's how 7 months is calculated. We talked about if you are born on the day 1 of the month, your plan starts the prior month. Let's say I'm born on November 1st. October 1st is when my plan starts. Because how the Medicare is calculated is, if your birthday is between 2nd and 31st of the month, you'll go into effect the first birthday of the month, next month. But if you're born on December 1st, let's say, your Medicare will go into effect on the 1st of the month prior to your birth month. That is November. This is Medicare Part A, hospital pay, day 1 to 60, 1556 deductible, 1 to 60. 61 day to 90 days, you have $389 per day. Days 91 to 50, a little bit extra. All days after 50, all costs. So this is just Part A side of things, One of you asked me about part-time situation. So if you pay Medicaid taxes for just 39 quarters, okay? So till you turn 65, let's say. So the premium for Part A is $274. We pay a little bit for Part A. And if you paid Medicaid taxes for less than 30 quarters, this happened with one of my uncles. He's not born in the US, came from India, green card holder, didn't work for 40 quarters. Didn't work, and he turned 65. So he had to pay $499. So Medicare Part B section of it, we talked about premium $170, deductible is $233, pays 80%, 20% is no limit. That's why we were talking about Medicare supplement, to cover that 20% risk. There's one more element to it. If you made a little bit higher income, if you're in a higher income bracket, if you made $500,000 or $1 million or above, you're going to pay $578. Whereas joint tax return, somewhere less than $228,000, you pay $238. Enrollment while working, and you're not on Part B. While working, not on Part B. So what if I plan on continuing to work past 65 and not taking Part B? No worries. Some workers enroll in Part A, not Part B, where the employee health plan is still in force. Check with your employer regarding this option. That's why I'm asking, please connect me with your HR department. I want to explain them this process so that you're covered and you don't pay the penalties. When your employment ends, you will want to activate Part B right away. At this point, you'll have 7-month open enrollment period, starting the day that we lost the job, 7-month enrollment period, to sign up on any available Medicare plans once activating your Part B. What if I plan on continuing to work past 65 and take Part B? So there is an element here. You will have a 63-day guaranteed issue window to sign up for Medicare supplement without underwriting. So this is where I was saying they will not ask you for medical checkup or anything. They have 63-day window where they'll say, okay, you are eligible for selecting any Plan G, Medicare supplement. No questions asked. The whole one-pager that I gave you is built on this concept. There's a fork in the road. You either take original Medicare or you take Medicare Advantage. You need freedom. You're not tight with finances that much. The original Medicare path. If you have Plan F already, you can keep it. But over here, people are turning 65, so you can't qualify for this. But I'll tell you also, Plan F is getting expensive because think about insurance rates. Think about insurance rates. Insurance is a pool of people. If you have 10,000 people, each one pays $50. If you have 5,000 people, each one pays $100. Because insurance is, you have more people, the costs go down. The risk is distributed. So Plan F was a great plan, but because there is no more people in Plan F, that plan is shrinking. People are lesser number. Each one is paying a little bit extra. So I got calls asking, Nash, can you move me to Plan G, because Plan F is getting expensive. Sure, we can do that. And if you are with the same company and Plan F and Plan G are available, that company will not ask you to go through underwriting again because they have your health history, everything. They'll put you in a cheaper plan. Some companies are not that cheap, means like $50 difference. Then we move to a new plan. And I have done that, both switches. So you just have to work with me on that. So Medicare Part D is so crucial, I'll tell you this. You might have the best insurance plan. You might have the best coverage. Think about it. You still have to go to the pharmacy every month at least, 30-day supplies, 60-day supplies. That's the most frequently used services when you turn 65, is prescriptions. And why I say that is you have to pay a little bit attention to the prescription Part D plan. A lot of folks sign up and they forget. They keep on paying the same amount, and suddenly they say, Nash, I don't know, man, like I'm paying $1,500 for this prescription drug. My friend called me, she had the same generic drug in Walmart, she's only paying $4. Yes, that happens. I'll tell you why. Pharmacies, prescription drugs, and insurance companies, they're all a group of people who are trying to cut down costs on one drug, increase cost on the other drug. Every year this magic happens across thousands of drugs. So you have to work with me. Every year I key in the prescription drugs and say, Ms. Jones, are these the 4 drugs that you're still using? Nash, nothing has changed. This is what you're going to pay. Stay with this plan. I have added one more extra drug, Nash. It's for my thyroid. It's a little bit, I'm not feeling well, so this extra drug is slightly expensive. Once I key in, the plan changes. This is a much cheaper plan for you versus this plan that you are on. So if you add drugs, and something happens, right? After 65, you get sick or ill. You have to reach out to your agent once a year. Once a year. We key in the drugs and we see if you can save money or not. Prescription drug plans, these are the stages. We talked about it. Deductible, we know what it is. Initial coverage. The donut hole concept, coverage gap. So this is where I was talking about prescription drugs are costly, expensive. So this coverage gap, I can help you. I can help you plug that. Then there's the catastrophic coverage. And every year, coverage resets on January 1st. It starts again January 2nd onwards. So we want you to review your plan once every year. Medicare Part C, run by private insurance companies and approved and under contract with Medicare. So they outsourced that process. So this provides you coverage for Part A and Part B, but can charge different amounts of services that we know. But you also have to pay Part B premium here. Even if you're getting Part C, you have to pay Part B premium. That is $170 a month. That is coming from your paycheck. Plus Part C. Plus Part C. Cost for items and services vary by plan, co-pays, or co-insurance until the max out-of-pocket is reached. MOOP, max out-of-pocket for Medicare C. You have to, that is real number. This is the slide that I wanted to focus. You have to have an HMO for a 3,450 max. PPOs tend to have around 5,000 in network. 5,000 in network. Sir, this number, does it match with your just approximation? 5,000. So that's almost $400 per month. $400 per month, just to be careful, just to round up the numbers. In network, and 10,000 out of network. 10,000 also not every time. Not every time. When you travel, but 99% if you're local, this $5,000 in network. Remember, this is maximum out of pocket, doesn't include your drug cost. So for prescription drugs, it's extra too, a little bit. So I think some gentleman asked me this question about Medicare doesn't cover long-term care. No coverage, no coverage, excluding nursing homes, Dentures, crowns, x-rays, partial crowns, they don't cover. Vision glasses and exams, hearing aids, they don't cover. We have plans that do cover these things. And it's very transparent, easy to understand. Folks, it's a pleasure, and I hope, ignore my accent, ignore my passion, but I'll tell you, I care about this. I want to save money. And please, if you have someone, your family, friends, refer, because referrals are important. And my site is alive or active on Google. If you like my training seminar, just leave a positive note, because these days we are only surviving because of reviews. If there is no review, people don't even talk to us. And that's how review economy has built. How many of you have bought something on Amazon because of good reviews? So Amazon trained everyone, all entire world to look at reviews. So yeah, if you like it, please. And if you don't like it, please reach out to me in person and yell at me. Don't let the world know that. Don't let the world know that. We are a small company, dependent on patrons like you. Okay? Thank you, folks. Appreciate it.